I will have this available as a podcast on Spotify, Apple, all your favorite platforms. So again, stay tuned for that. My name is Michael Gayed, publisher of the Lead Lag Report. Joining me for the hour here is Marin Katusa, who's one of my favorites in terms of the way he communicates fairly complex issues as it relates to carbon credits, demographics, geopolitics, pretty much everything you can imagine. But Marin, for those who are not familiar with who you are, talk about your background. How'd you get involved in investing, in particular the carbon credit space, the energy space, research, natural resource space, and what are you doing now?
Basically, being born in Vancouver, which is the epicenter of resource finance, I kind of stumbled into this sector. My background was I was teaching math and calculus, and then got into this serendipitously, never planned on it. You take the geology courses in university. Back then it was rocks for jocks just to keep your scholarship up. And being in Vancouver, I started in 2001 in tungsten, got into rare earths pretty early, then uranium. And then I got into actually developing projects like Copper Mountain. I was the founding director with the late Jimmy O'Rourke. That became Canada's third largest operating mine. And then one of my profs from the university, he was kind of the leading guy globally for shale. And then I had the idea in 2005 to get heavily invested in shale. That became Quadrilla, which was the largest European shale company. And we were bought out by a big firm there, Riverstone. And then just kind of get into developing and building projects like what we did with Equinox and, Dakota Gold, what we're doing in Tintic in Utah. And just stumbling along, learning as you go. And, here it is today, 20 years later.
So I think we're in an era where there are a lot of surprises, not in terms of what's happening, but things happening all at once. And I went through your timeline to go over some topics. So I want to first hit on what's going on with carbon credits, because it's interesting to me that there has not been a really aggressive pullback in the context of this pushback around carbon credits with energy prices as high as they are, and obviously everything going on in the oil market. So talk about what's happened in that space. And maybe first for the audience, explain exactly what carbon credits are and how the whole setup on the trading works.
Sure. So carbon credits are not a new creation, but what it does is a credit is technically supposed to represent the sequestration or the prevention of 1 ton of carbon dioxide in the atmosphere. Now, there's 68 different forms of carbon credits, and there's different vintages. And then even within that, when it was created in the Kyoto Protocol and, way back in COP1 in 1998, it's evolved immensely. So you have a compliant market in Europe, which is, the EU ETS is the big price that everyone follows. Then you see the tension between what Poland's doing and what, the Germans want and what the EU wants. So that price is what you're probably referring to is touching all-time highs. And when you mentioned with, power prices and gas prices, here's the reality. Even at all-time high prices, the price of pollution, and there's something key that people have to understand. Mark Andreessen famously stated, 2000 to 2010 was the digitalization of the information, the internet. 2010 to 2020 was the digitalization of data. Well, I believe, 2020 on is the digitalization of pollution. And now you can actually track this and you see what's going on, not just in the EU side, but you look what's going on more in a voluntary market in the US, where the SEC is now stating, hey, you're going to have to report your scope 1, S1, S2, S3s. And everyone's jumping on board, not necessarily by their own will, but you look at what happened with Exxon. That was the greatest case study of one of the largest companies globally, one of the powerhouses in the oil patch, got essentially removed by a small fund. The directors spent more money fighting that than what that small fund invested. Now, granted, the small fund had big fund allies, but the shareholders are forcing this, and now the directors and the executives are committing publicly to these commitments of decreasing their carbon footprint. Well, you can only do so much from your operations. You have to fund. There's many forms of decarbonization. We're still early in the sector, and it's a commodity, and the volatility will be there, just like in uranium. Everyone's talking about uranium today, but when I was the largest financier of uranium in the world in 2018, 2019, and 2020, nobody wanted to hear the word uranium. And that's kind of where we are in carbon credits today. Is last year, with the success of a couple of companies, you had about 40 Me Too companies raise a little bit of money. They rushed into these markets, not really knowing what they're doing. Too many rounders joined the sector. And investors kind of got ahead of themselves on the expectations. We had what happened with the market pullback in Russia, like you said, many vectors all, independently happening at the same time. And, the voluntary market prices across different forms have significantly pulled back. But the valuable credits, the ones that are internationally recognized by all firms and meeting the highest standards, they actually haven't pulled back that much at all, even from its peak earlier in the year. So hopefully that answered your question on carbon credits.
Yeah, and is there any sort of, are we past the point of no return in terms of the regulatory push here?
I believe so. I believe it's not like, look, there's this push against ESG right now. And what people have to understand is ESG is going to evolve, just like the accounting standards have evolved, just like the techniques in the internet have evolved and the oil patch has evolved. ESG is going to evolve. And I'm not saying it's a perfect setup today, but it's going to evolve and improve, and people are going to learn from their mistakes. But where the decarbonization, it's the largest growing sector within the bond market, the green bonds. It's where the big pension funds are going. You go to websites like carboncredits.com, you can see the prices there and the volume. Look at what, my buddies who run Expansive, which is the largest platform for trading of these credits. They had multiple bidders and billions of dollars thrown at them in this market, not at the peak market. In this market, they just closed a super large financing. They had multiple bidders. You look at Brookfield, who I think are some of the smartest guys in the financial markets. They just closed an oversubscribed fund for $15 billion. You just look at the commitments coming from the oil patch, from the tech sector. I believe there's and look, I've never received more negative attention in my plus 20-year career in the resource sector as I have right now with carbon credits, specifically from the resource sector, the older investors. And that tells me that I'm probably more right than I've been on any other commodity in my career.
By the way, on that point that ESG evolves, I'd be a little bit maybe cynical on that. It's not that it would necessarily evolve, I would think, but rather that the weighting of importance goes from E or from S and G to E, right? I mean, the issue with the term ESG and the vilification of it, I think, is that you're talking about three different things inherently: one environment, one social, one governance. And that's why you're seeing so much variability in what's considered an ESG.
Correct. And you look at the pushback from Texas and Florida and 9 other states against BlackRock, and there's going to be a transition. But the reality is if you want to list on the New York Stock Exchange or the NASDAQ, you're going to have an ESG report, and it's going to change. It's going to evolve. That's just the fact, because certain funds just can't buy you. And why exclude yourself? Because here's the truth. Your cost of capital will be higher if you aren't doing things the way that the framework is set up to do so.
But how much of that is companies doing it just for the token of saying that they're trying to take on ESG initiatives, right? I mean, presumably there's some that will companies that will almost treat it as virtue signaling just to get access to that higher.
Totally.
Right.
The answer is all of the above. I know guys that can't stand it and are only doing it because they have to. And that tells me that we're past the point of return. So if you're going to do it right. Do it to make things better. And I've seen personally the benefits of it being done properly. And I've also seen what you're saying, the virtue signaling, and that will be, evolved out where people start. Like, for example, when I wrote my book a couple of years ago, I made a joke about how the hell is Home Depot one of the top 10 holdings in the ESG funds? Have you ever gone into a Home Depot? Are you looking at where the things are built and, think about the carbon footprint of all the goods made in China and the shipping and all that? It's starting out. We're early in this. This is going to be with us for the rest of our career, decades and decades.
I tend to be cynical from the Wall Street point of view that the reason why energy maybe has not been part of the ESG space, or at least the oil and gas companies, is just because there really hasn't been momentum. And as the energy sector has been having some momentum, now you're starting to see, maybe we consider it more on the S&G side than the E side, right? So is there any relationship or correlation between the carbon credit demand and the price of oil? Because I keep hearing on and on these spaces that the reason we're in this situation with energy prices is because of this huge push towards ESG. It sounds to me from what you're saying that that's not really the full story.
No, it's not the full story. Okay, first of all, let's use uranium, for example. Okay, let's use a real world example that everybody wants to talk about because uranium's kicking ass right now. Well, that had nothing to do with ESG. The reason why uranium is post Fukushima. And the reality is the elephant in the room, just like when I gave the keynote speech at the World Nuclear Fuels Market in 2015, I said, it's all about Kazakhstan. Why? Well, because Kazatomprom can produce at a price that no one else in the world can produce because they're not really following the guidelines of, what would be the same way as UEC or Cameco would in North American standards because it's a different part of the world. But number two, they're producing in the infrastructure was built by foreigners, right? North American money, North American technology, and Areva back then, European money. And then they claw back the ownership. But they're producing in tenge, the local currency. And as long as the currency devalued, they were able to keep pumping that stuff out. As long as their currency devalued at a greater rate than the price of uranium, they were still doing okay in operating. Okay, then you had all the, Uranium Royalty Corp and the Uranium Trust came in and scooped up on the spot market, yellow cake and all that. But that's why development wasn't happening because the prices weren't there to justify the investments. In the oil patch, you look at the same thing, the success of fracking and all these different, then the market pulled back. So blaming ESG is kind of like the easy thing to do, but it's not really the real reasons why things didn't get developed. So look, it may be in some cases it was, but not for the whole global sector.
Yeah, no, and obviously I agree with that. I mean, it's always more complicated and complex than a soundbite. I think it's the point. But if a lie is said too many times, so many times, people end up believing it, right? So if that's perceived to be the reason, then there becomes this really vitriolic response towards anything ESG related, and that becomes problematic in its own way because every extreme, no matter what, is a problem. But that's a good transition to discuss a little bit more the uranium side. And again, everybody that's here, if you want to ask any questions from Marin, feel free to click on that mic request button. I've had Amir Adnani on before, Kevin Bambro, Rick Rule. Everybody's made a very compelling case for nuclear. And when I had Amir on, it was the day after Japan said they're going to restart on the nuclear side. Talk about, from your vantage point, the history of sentiment towards uranium, and if there's any risk again that, and I know it's still very early in terms of public perception improving for nuclear, but if there's any risk again that we end up going back to a period where people say, "No, we can't actually do this uranium nuclear thing."
Look, the markets are super volatile, and we all know how wacky gold bugs are. I've always said silver bugs are gold bugs on crack, and then the uranium bugs are silver bugs on crack. So
yeah, they're radioactive, you could say.
They are radioactive, right? Up and down. And look, I love the sector. It's the easiest sector to get insane comments on, and it's a very emotional, passionate sector. But where we've gone through the lows. I remember in 2018, 2019, when Amir was starting up Uranium Royalty Corp, that company started at my house at the New Year's of 2016. I said, Amir, we got to go in and do these royalties and look what Scott and Amir have built. And I've been the main financial backer of that the whole time. So the dark days of uranium are over. Okay, I don't see us going back to $17 a pound because of all the obvious reasons. Remember, all of the greenies at that time hated uranium and nuclear. The EU, a bigger thing is stating that the EU has now approved for the funds, their pension funds, their ETF funds, the banks, that now nuclear fits into and uranium fit into the green energy and the decarbonization of funds. Now, as crazy as it may sound to someone like you and me, that a government will decide what is applicable to what sector, the big pools of capital, now it meets that criteria. So it's all about supply and demand, and you're going to want to get criteria. All I've been saying for the last 15 years, someone who's been to almost all the projects globally, why take the risk in places where you don't have the rule of law, you don't have infrastructure, where the Chinese and Russians have an advantage because they're playing with different guidelines and rules than a North American investor or a North American company, when you could go down to the US, which, by the way, in the late 70s, early 80s, was the world's largest producer of uranium, to today, nothing. But you have infrastructure built, the rule of law, permits in place, and you have the number one customer in the world. So just be super careful in this, exciting time for uranium, because it's fun when your stocks are going up. Just be careful of going to what I call AK-47 nations, where the same projects are being recycled back when Rick and I were doing this in 2003. And Bam Bam, what you call Kevin Bambro, I call him Bam Bam. That was his nickname back in the day. And I don't want projects in Namibia that I've seen being recycled for 20 years. And guess what? They're still not developed. But this new rounder, who used to be a marijuana company or a rare earth company or a lithium company, is now going to figure out how to put it into production in, Namibia. Come on, right? So keep it simple. Follow the good guys in the business.
Well, plus there's this added risk, which I've seen you reference, which is that you got to be careful about doing anything on the international global side because of the way the dollar's responding, and a lot of these countries
Correct.
have a lot of dollar-denominated debt. So let's link that discussion around currency movement. I've been pounding the table for the last several months on this idea that the dollar is acting like there's a sovereign debt crisis coming. Who knows from where, right? But the point would be that usually sovereign debt crises tend to be seen first in currency volatility. So how does currency movement factor into the uranium play short term? Longer term, totally different story, right? But let's talk about that dynamic for a bit.
Well, so what you're asking is, from a macro perspective, if you don't get the dollar right, macro, I don't care what you go, you got the rest wrong, right? It's just the dollar is so key in a macro perspective. So, I personally been there, done that, going to Russia, Kazakhstan, Uzbekistan. I don't see how a company listed in Canada on the venture, is going to have an advantage over some Russian company or a Chinese company in the area of influence, number one. Number two, you look at permitting a uranium mine. I don't care where you are in the world. I remember going with Ron Hochstein when he used to run Denison. I think it was in 2004 or 5. We were at the site visit and they were looking at permitting a mine, and there was literally nobody at the state office that was alive when the last permit was applied for and accepted in the state for the uranium, meaning there was no rules. Nobody knew how to do it. Never mind going to places and parts of the world where they have no uranium production. How are you going to get that through? So think about the years of social costs. And, it doesn't matter where you are in the world. Uranium does have a different sociological imprint from not that it's an uneducated base, but these unknowns are easily manipulated. The Jane Fonda effect. You look at The Simpsons, people just think nuclear is dangerous, even though I could argue till I'm blue the opposite, right?
Well, it's only availability heuristic, right? It's like when people think that it's more dangerous to fly than drive, right? Because they think about the crash, they can visualize the crash, and you can visualize
the meltdown.
Right.
Yeah.
Right. Exactly.
Right. I'm with you on that, right? So, but the FX is a big one, and secondly is where are you going to send what are you, the yellow cake, where are you sending it to? What about the infrastructure, the insurance aspects, the port? It's not like you can just send, for example, the permits to ship radioactive material, even in the Athabasca Basin. I remember 15 years ago, I wrote a report how, all these companies were saying they're going to build this and build that. Well, even if you did, you have to incorporate the roads, because the roads are private roads, and you can't just drive radioactive material on public roads. You need permits, and you got to build private roads. And a lot of people don't know that in the Athabasca Basin, a lot of the roads are actual chemical roads or Areva roads and these different aspects. So, and building a actual, when I was the first allowed to go at McLean Lake, which is the largest, think of it as like the oil refinery, it'd be equivalent of over 2 billion barrels of oil refinery in the Athabasca Basin, to bring video footage and show subscribers how do they actually take rock from high grade mine to produce uranium and how radioactive it is, and the costs of this. You're talking about in the middle of nowhere, minus 30 degrees Celsius in the winter, 2 weeks on, 2 weeks off. And it was pretty cool. They had a gym, they had a band room, movie theater room, but you're talking about billions of dollars of capex, and capex is absolutely key to understand. And when my book, I talk about crossflation, about how certain things, building things, are going to be expensive, but the digital world's going down, deflationary forces, and you're trying to build these things in foreign jurisdictions with US dollars, but where are you going to sell it? Are you going to be forced to sell it in Argentinian currency, in the tenge in Kazakhstan or Turkey? Think about the way the government controls on your money in the foreign jurisdiction. Are you getting the international real rate? Are you getting the government rate? And are you allowed to even take that money out of the country back to the shareholders, or are you stuck in the country? So those are key aspects to think about when you're going in the international market.
That point about capex and the road point, actually, I thought was particularly interesting. So I'd never thought about from that perspective. This idea that you need to have the infrastructure in place. Well, to have the infrastructure in place, you're going to have to borrow, presumably, to do that. How do rates impact that thesis if indeed interest rates stay elevated for some time to come?
So that's a great question. And it just proves the thesis that we've always had. Why try to go build something in a place that has incredible inflationary pressures and the government's going to change the rules on you, when you could just go to the US where it's already built, it's permitted, you own the access roads. A lot of people don't realize, like in the US where some of these mines are, if you're pulling out this yellow cake, you have to pay. If you don't own the roads, you got to pay the roads on these ranches, right? You look at, I'm not going to pick out anyone that I know are in a negative position, but these aspects are things that the investor may not be aware of. So if you're going to somewhere like Namibia, which has great uranium endowments, how are you going to pull all this together? And who's going to build it? And you have to pay in US dollars to build these things, because the big projects, the big engineering firms, and to build the crushers and the trucks, they're not going to take the local currency. It's the US dollar, and that's going to be linked. And as rates go up, the cost of capital goes up. And then what does the government do? If you're in a negative swap line, you're pretty much guaranteed that they're going to raise taxes on you. And what easier to go after than a uranium mine owned and operated by a foreigner? You're easy pickings there. Hence why I can't be more bullish for North American uranium production assets.
I did a space with David Fishman 4 or 5 months ago titled Investing in China's Energy Transition. And he had talked about some of the broader plans that China is trying to do to bump up electricity usage. Talk about the role of China for a moment on uranium and nuclear, and if that ends up being a net positive, or if there end up being some nationalization aspects to that side of the market.
So about 13 years ago, I wrote an article about how in the oil sector you have different, Brent price, WTI and all that. Back then you already had that fragmentation. I'm not talking about spot price and long-term price. The Russians have half of the refinement capacity. Everything that goes through Kazakhstan, the Russians have incredible. Mongolia, a lot of people don't know. It's all the geological stuff is written in Russian Cyrillic. You look at what's going on there. How did any North American company fare in the uranium sector in Mongolia between 2003 and 2012? Just look up how CEOs got, murdered or suspiciously found dead. But China and Russia have a huge influence in these areas, and what I'm saying is, in areas of specifically certain parts of Africa, China has such an advantage over any North American company. Why would you want to go make a bet where all the odds are against you? You're not going to win. You're not going to beat China in certain parts of the world. So they're a huge player in it, massive player, and they're going to continue to be, and they're going to continue to grow in certain parts of the world. Hence, my book was basically about this G2 world we live in. So you have to pay attention, and China's going to move forward towards a diversified energy matrix, which they need to do, and they know they do, and they're going to do it. Granted, in this pressure where 18% of China's electricity is hydro, and at record floods, the flow's not there, so they're fast tracking coal in the near term. But nuclear is a huge part of China's future, and it has been, and it's going to continue to be so.
I want to keep talking through the China dynamics for a moment and pivot a little bit to the property sector there. I'm sharing in the nest for those that are in the space, Katusa's research on China mortgages and housing, and talk about how there's a real issue with defaults and debts becoming kind of more and more at the forefront. Talk through to the audience how you see the real estate market currently in China, and dovetail that a little bit into the lockdowns. Because I heard a video of you talking about this idea that it could very well be that these lockdowns don't really have anything to do with COVID, that there's another sort of agenda at play.
Well, I think the government, regardless whether it's China or the US or the Canadian, the one thing they're going to do is take advantage of a situation, right? So let no crisis go. Crisis and opportunity are the same word in Chinese. So you're talking about very powerful politicians, and even within the CPP, there's competing forces even within the party. But you look at, so I published some charts showing how the domestic debt within China, household debt, is now exceeded the American equivalent in 2007, which was at its highest point. I thought that was an interesting thing to think about. And you look how, inflationary pressures and delays and all these different factors where the buildings aren't built to cost overruns. And just like America had their housing crisis, China is a great power and it's a huge economy. And they're going to go through similar, not the same, but similar issues. And do I expect the government to do what the US government did, which is bail out some and let some fail? Of course that will happen, right? But from a commodity perspective, you have to look at, okay, well, how does this affect it? So one thing we stated was look at the iron ore. China did one brilliant thing was they took advantage in a big way in the commodities during the early periods of 2020, during the COVID lockdowns. They really stockpiled in a big way. For example, like iron ore. Now you look at iron ore's dropped by 50%. And is that directly linked to the housing market? Of course it is. So, there's this expectation that, China's going to dwarf America and America's days are over. But what I'm trying to remind people is America's days are not over. I have a very different perspective, irrelevant if Biden's background colors are red or blue or whatever. This too shall pass, Biden's time, as MAGA and all these issues within America. You look at the demographics. China's got a big demographic issue moving forward also. So you look at all of these compounding together, China's cooling down, and that's going to have negative pressures on certain commodities. So you just got to position yourself. And from a macro perspective, I would say, Mike, as a large gold investor in a lot of these projects, a gold guy like me to say US dollar is the place to be was also a very heated and hated comment. But we see it in real time, right? And, and it's going to continue to stay so for at least the rest of this year.
And so if you were to say to somebody a year and a half ago that the dollar would have been the best inflation hedge, you would have been laughed out of the room. But I put that tweet out before. Ironically, that ended up being what ended up happening, right? In terms of this high inflation and the dollar. And I get it's all relative, of course, but it's just remarkable to me how narratives never quite come to reality.
Well, you talk to the Bitcoin guys, they'll say their thing. But I remember my buddy Brent Johnson and I, and I would publicly say my largest I'm Canadian. I'm a Canadian guy. So, we have this different perspective. We're kind of like the Switzerland. Everybody likes the Canadians. We're the peacekeepers globally. But, and for me in our sector, and I'd say the US dollar, my buddies like Rick and Doug, they'd all be like, what the hell are you smoking? I go, guys, you have to keep it in a relative perspective. I'm not saying America and the currency is perfect, but relatively speaking, do you want the euro? Do you want the yen? Do you want the renminbi? Like there's so many, you want an Argentinian currency, the peso, the Canadian dollar, you have to keep things perspective. And this is the hard part. As bad as it's been, for the other currencies, what's going to change that in the near term?
Just to reset the room for everybody here, first of all, please make sure you follow Marin Katusa here on Twitter, as well as the Katusa Research Twitter account, and obviously check out his research. Really wildly knowledgeable on a lot of parts of this discussion here. I think the issue with China, which I think most people would agree with me on, is that there's this constant lingering fear that this property crisis, if you want to call it that, at some point metastasized into something that affects the U.S., right? That it becomes a systemic event, a risk event like what we saw in 2008 on the U.S. housing and Lehman side, obviously. Do you see that as a risk factor, or do you think China can really keep it largely contained and controlled?
Well, one way you keep it largely controlled, they still have a lot of levers to pull. Like, people forget that it's pegged, right? So you can readjust the peg. So they have some flexibility there. They also have the ability to do things that the US or the EU couldn't do, even though COVID's now been, almost in its third year here. China can still keep this pressure on its citizens that good luck doing that in the US. Certain states in the US would have zero weight. Some would be more abiding, but there's many still levers that the Chinese can do. So do I see this unraveling and creating a storm onto the US? No, because I think China can contain a lot of the issues and they still have a lot of levers to pull. And it comes down to understanding the currency. And with the friend shoring or reshoring of manufacturing that's going on in China, what tools can China use to compete with someone like Indonesia or the Philippines or, Japan? Well, work with its hedge, right? Work with its peg. So devaluing the currency is something that I expect it will do.
Right, which would, I mean, there's the peg there, right? So that would seem to be something that could be a pretty massive event or change dynamically, right, to currency.
But remember, it's controlled to a strong currency, so they would be able to control their own narrative and destiny, where other currencies can't. Like the yen can't do that. The Bank of Japan doesn't have that ability, whereas China does.
Yeah, no, that makes sense. Okay, let's talk about the precious metal space for a moment, because gold bugs are not anywhere near as prevalent as they used to be back in 2011, 2012. I remember very well when I used to write for MarketWatch that if you said anything about gold, the page views shot through the roof, right? And then Bitcoin became the replacement for that, and maybe uranium will be next. But when you look at these concerns around volatility in the bond market, volatility in currencies, and then the spillover, which may just be starting yet again in equity volatility, there's been this broader frustration, complaint, whatever you want to call it, that gold has not, in this kind of environment, performed better than what one would normally expect. Right? And of course, I understand that's broad, but I'm curious to hear your thoughts on why the gold market hasn't seen more interest in this year, which has been wildly anomalous.
So let's break it up into two different segments. You got the gold price, like the physical commodity, and the investors in the demand of physical gold. And like I wrote in my book, and I've been saying for years, you don't have kids in Vancouver or California going, geez, I need to buy gold to hedge my currency. That's a thing that people are doing in Russia, the emerging markets, in certain parts of Asia, India. That is an emerging market narrative. In North America or in the first world, that's been replaced by the cryptos of the younger generation, right? So the World Gold Council came out and, their big plan is to create a gold-backed crypto and to excite the markets. Let's see how that plays out. And that's part of the reason why, the price of gold, and you have many ways, the ETFs, the GLD, then you got the GDXJ to invest in the companies, then you have the companies themselves. But let's just call a spade a spade. The companies have not delivered because of the crossflation. Like, you look at how many cost overruns on new mine builds, all-in sustaining cost, AISC, on the gold is up 30% across the board. They got to pay for higher labor prices and just higher energy, higher fuel, higher tires, higher just everything with the supply chain issues. And the narrative of $2,000 gold came. We had $2,000 gold, and the $900 all-in sustaining cost for the majors is now $1,200, $1,300, and the liabilities are still there. So the dividends, the investors have not been rewarded, and it hasn't quite played out the way because of the cost. So the companies have a lot to do. And in my opinion, that's why my two mantras are, number one, I won't go negative swap lines. Number two, I love going to areas of, previous production, because the best place to find more gold is to bring modern technology to a very well-endowed, high-grade jurisdiction. Like if you want to go to Homestake or the Tintic districts where it's high grade, and grade is king and metallurgy is queen. The industry has such a negative cost. And the other aspect, a lot of these gold companies don't even qualify for these generalist ETFs funds because they're a Canadian company. They're in Quebec. They're run by these management teams that you can just don't meet where the money is, and the money is in America. The big funds, the big ETFs. You look at something like the Wilshire 5000. It has a 10 times impact than a GDXJ on buying power. And how many companies meet the Russell 2000 metric or the Russell 1000 versus the GDXJ? So it all comes down to supply and demand. The Canadian market, which was generally the place for the golds, the funds have been net outflow. For example, if you look at pre-COVID to today, it's net minus $1 billion of the pool of capital in the actual miners, whereas the pool of capital for the actual metal is increased substantially during that time. It's just the money's not going to the sector because the management teams aren't delivering what they said they would deliver. And money is going to go to where it's respected.
Yeah, and that point about the distinction between the miners and obviously the expense side, I think, is important because I talked to a lot of advisors and traders and investors, and that's always been the line you often hear, right? That you want to invest in gold miners if gold is doing well, but gold miners actually tend to not correlate anywhere near as strongly to gold prices as most would think because of those, the expense side, to your point.
Yeah, it's going to continue. Like a lot of these companies, they have depleting resources. So it means they're going deeper. It's going to be higher cost. And they have the pressures in certain areas now because they produce in US dollars. And wouldn't it be great for a country to say, hey, let's take Argentina, for example. I believe Argentina is where money goes to die. So the energy minister of Argentina came out and said, these companies aren't meeting our level of environmental standards. What level of environmental standards? There's no one in the government that's ever built a mine. You're talking about the highest level of standards, these American and Canadian and Australian companies, but it's such easy prey to increase the government take. You're going to have that happen in these negative swap lines also because as the US dollar goes up, the governments need the money. And who easier to blame than a foreign company? So be careful where your money is.
And that correlation of miners to gold, I'm going to assume, is lower than the correlation of uranium miners to uranium. Is that a fair statement? Because a lot of people want to get access to the uranium space. The stocks have been doing well, but the question is, what's the primary driver to determine what to focus the trend analysis on?
So uranium is very, very different than I'd compare to the gold. For example, one company produces 40% of the primary uranium production. That's Kazatomprom, right? Then the next, you got Areva, and now it's called Uranium. You got Cameco, which is kind of more of I like Tim and Grant, but they're more of a trading company with contracts than miners until they really get going again. Then you have UEC, Uranium Energy Corp in the US. So you said you had Amir on. They're the big player in the US. And with their recent acquisition, I think they're now 1 or 2 in resources in the ground globally outside of Kazakhstan. And then you have just a bunch of other smaller players. You have Japanese as part interest. They're the JCUs, that part of the world, they're coming back. Then you got the big Rosatom and the Chinese groups. And they're not really going to be playing in North America. They're going to be playing in areas in Africa. I remember in Madagascar, there was a site visit on one of the assets got buying, and it just happened about a month after Fukushima. And it was a phone call from the government to the bankers saying, make sure you get this done. And it was a Russian phone call from the government of Russia, making sure it gets done. That's the difference between what's going to happen with China and Russia in the nuclear uranium sector than say, you're not going to have the president of the United States phoning up a banker and saying, make sure Cameco gets their deal. But that does happen in China because it's a national interest. We're not there yet in the EU or the US side. So rather than building something, just stick with the guys who've been doing it for 20 years and they have the assets produced and built and they can do the contracts with the government. Because at the end of the day, the utilities have had these. I remember in 2013, I wrote an article going, why would you want to hedge at $40 your production for the utilities just to tell the market that you're a producer? Hedging yourself at 40 was the stupidest thing. And guess who now became the biggest in the US? Amir Adani's UEC, because they didn't hedge themselves. They didn't deplete their best resources because the utilities were dangling a little bit of money to keep the operations alive. All those companies are all gone now that did that. So the uranium sector is very different than the gold sector when it comes to companies. For example, there's about 700 operating mines globally that produce over 100,000 ounces of gold a year. And I think those are owned by about 240 different companies. In the uranium space, it's way, way smaller, the number of companies that the utilities can actually contract with.
Yeah, that point that you mentioned about and Amir was very passionate about this point about, he was adamant it should be unhedged. It's like, what's the point of doing it unless you're going to get the explosive, pun intended, upside, I think is interesting and probably one that most people are not thinking through because it requires real deep company analysis as opposed to buying
not
ETF.
Only that, you know how much pain he went through during that time? I don't know if you're aware, he's my best friend. He sat behind me in organic chemistry class. That's where we met. We went to university together. And that time period, every banker, every analyst wanted to hedge because they could put it into their model and they could tell their investors what they were going to make. He was the only guy who stood up there and said, this doesn't make any sense. I'm not doing this. Now, looking back, it sounded like A, it was the right thing to do, and B, it sounded like he just did it. But the amount of discipline and pressure and pain that he went through, I watched it in real time. It was incredible, and he executed, and good on him today. And that's why his company is a massive success. He has no debt, hundreds of millions of dollars in the bank, and he's the go-to player now.
Yeah, no, it's funny how people often just see the success, but not the struggle journey, right, that happens to that point. And the madness that you go through during those periods where you believe in something and it's just not working, but it's coming, but that sequence is what matters, not the end point.
And I will say this publicly, that where we are in carbon credits is exactly where uranium was in the dark days. It's people laugh at me. They go, oh, he's gone wacky. He's gone, the shit that I've got to deal with from what people send and say. I just say, whatever. It's the same peanut gallery that said this to me in uranium, and uranium's played out very well for my subscribers and myself, and I expect carbon credits. Here's the difference. Not every company that wants to be listed on the New York Stock Exchange or NASDAQ needs to buy gold or needs to buy uranium, but you better believe that they're going to be all internally looking at how do they offset their emissions, and they're going to be buying carbon credits.
Let's talk about fire sales for a moment, because you can have a belief or thesis in a particular investment from a very long-term perspective, but obviously you want to get it as cheap as possible, and fire sales is how you do that. And oftentimes those fire sales are usually, I think, the result of an event, some kind of capitulation that happens on the broader market, broader beta. Talk about, from a macro perspective, how you just view the stock market overall in terms of where we are here. And is there anything that would, in the movement of the stock market, make you say, okay, now's the time where I want to not just bet on nuclear, uranium, gold, but really lever up because things are really, really underpriced at that point?
I'll just tell you like what I do personally. So there's a mining legend Hall of Fame individual named Bob Quartermain, and he's built two very, very large successful companies. And his partner, Jonathan Odd, had the idea that, hey, these major gold companies want to have past producers that are no longer producing, that are part of their reclamation sector. They want them off their books because it's more of a liability. There's no value there for them. And they don't have the team to, people is a huge thing. So in 2020, I remember in April of 2020, I said, you know what, guys, I'm going to finance this because I think there's an incredible opportunity to go after major producers. Like Homestake produced over 40 million ounces of gold. Like if you ever watched the show Deadwood in South Dakota, it built the Hearst Empire. And what better place? This thing's not seen a drill hole in 20 years, seen no modern technology. You know that the geology, the way that geology works, there's millions of ounces of gold to go after. So when companies make a decision like that, you can pick up things for pennies on the dollar. Another great example was what Amir just pulled off on UEC. Look how the Russians sold, that whole thing. If you go back, it's kind of ironic. I was on the front page of the New York Times after my first book, all because of the Clinton uranium scandal and how, the thesis, the New York Times were going after Clinton, saying they sold all of their uranium to the Russians. Well, the Russians knew what was happening with the Ukraine. They had to sell their U.S. assets or it'd be essentially locked out and, they'd get it. And Amir came in and scooped it up for a fraction of the cost to actually go and build it and permit it. And he got a big operated facility built and resources drilled out. That's another way to go. So in a corporation, Newmont, for example, in the late 80s was a major copper producer, and their board of directors said, we want to get out of copper. So they went, and I don't know if you know the Washington family. They're a very wealthy family out of Montana. The largest copper mine in Montana is called the Butte. And Newmont sold that for $13 million. Dennis Washington bought it for the hangar for his construction equipment. And then the previous mine manager said, at $3 copper, this is net $3 million to you a day after costs. You're thinking about $1 billion of free cash flow a year to the family that Newmont just decided we're a gold company, we're out of copper, and you can start picking up assets at and usually companies do that at the bottom of the market, right? So, did the Russians want to sell that asset? Probably not, but they knew they had to. And it was a tough market, and it's a small sector. There's not many people that could buy that asset. So that's kind of how I look at it. I'm not smart enough to understand the other aspects of the markets. I'm a resource guy, and I just look at value. And if you can buy something that's built and permitted at a massive discount to going and doing it yourself, I don't know, common sense says that's probably a better bet to make.
I want to spend the next 10 minutes trying to be optimistic on America. I feel like I should laugh when I say that, but I had put out this tweet yesterday, which got a decent amount of engagement, basically saying that inflation is a bigger threat to democracy than any politician of any party. And really what I was kind of alluding to was the Weimar Republic and how that created the conditions, you can argue, for Hitler to come to power, and Hitler was elected. And you end up having a lot of this extreme talk, obviously, on the political front from both sides of the party. Help me be optimistic on America, because it seems to me, at least from the media and from the narratives from those that are in charge, that wording is getting more extreme, emotions are getting more extreme. Nobody is able to talk to anybody else without insulting them if they come from different sides of the aisle. Society, you can argue, is becoming more and more fractured. And I really do believe that because inflation is a process, you can maybe point to inflation as one of the main conditions for this kind of environment. But tell me I'm wrong. What keeps you optimistic that we're not going to have this real sort of fractured society?
Look, there's tension, no doubt, but let's pull it back 30,000 feet. Where do the richest in the world send their kids to school? Do they send them to Beijing? Do they send them to Delhi? Do they send them to Tokyo? Or do they come to the US, right? The UK's, sure, there's a couple of amazing schools there, but for the vast majority, you look at all of these incredibly wealthy Chinese families, mainland China, not just Taiwan, because Taiwan's completely set up over here, but you look at the rich, like Vancouver is a total reflection of that. I see it everywhere I go. In Shaughnessy, which is the highest, most expensive part in Canada, it's in Vancouver. It's the Chinese. 3 out of 4 houses are vacant in the richest part of the city, and think of it as, instead of having Swiss bank accounts, they have rich houses in Vancouver. That is one aspect. At the end of the day, the American dream is alive. A guy like Sergey Brin, his family escaped communism, and he's the 6th richest man today because of the framework and the foundation of America. Now, that's a 1 in a billion situation, but you look at the standard of living, just jump on a plane and go to the rest of the world. As bad, and don't get me wrong, there's horrible places in San Francisco and Chicago, but I'm in downtown Vancouver right now. I'm in my office, and I could walk 1,500 feet from my office, and the whole street is junkies shooting up. And you would think, oh my God, this is third world. But 1,500 feet from where I am was where Lucas Lundin and Rick Rule were both neighbors on either side of me, and it's called the Golden Mile, and it's some of the most expensive waterfront in Canada. And you're talking about 1,500 feet between junkies and the most expensive waterfront in Canada. My point being is there's problems. There's no doubt about it. But it's still the place to be. Where are the best and brightest coming? To America. And when I say America, I mean the first world, Canada. You look at what's going on in Australia. There's no doubt there's ebbs and flows, ups and downs. But you look at the standard of living. Okay, yes, there's going to be inflationary pressures. But, where was the internet invented? Where was all these different aspects? The the medicine and all these. And yes, there's issues with the healthcare. You want to talk about healthcare issues? Come to Vancouver, Canada, right? So yes, there's healthcare for all, and that's a great positive. But within the system, there's so many issues. You're going to go to the emergency because your GP it doesn't want to come into the office. They have an interview on Zoom and then go to the emergency. So now the emergency waits like 12 hours. So yes, there's issues, but at the end of the day, where do you want to be? Where is the capital going? It's just, I think the brilliance of what Brett Johnson was doing with the milkshake is to simply visualize where the capital is going. And he's been proven right. Doesn't mean that the price of Google doesn't drop 25% or 30%. Well, it's also been up tenfold over the last 15 years, right? So we can get into specific details and the rule of law of projects and permits and all these different aspects. But at the end of the day, they can't just steal your asset like they can in other parts of the world. And it's happening daily globally on mines. Just, resource and mining, such a small part of the world that we're not focusing, or the media and the governments aren't focusing on it. But, for me, America's in a great potential. And you look at, where's the highest grade operating gold mine in the world? It's not in China. It's not in Russia. It's not in Japan. It's in Utah. And you go to the site, you got strong, educated, young Mormon workers who are disciplined. I made a joke. I was with one very, very famous individual, and I made the joke. He asked if he could take a picture of it. I go, "Oh, you going to take it to the bar and impress the girls?" He goes, "We don't drink alcohol." Oh, okay, sorry for that comment. He took it the wrong way, right? I made a joke. My point being is there's parts of America that are doing incredibly well. It's just the media, it's clickbait. They want to show and emphasize the tension, and Biden's not doing himself any favors and all that. I get it. But trust me, at the end of the day, I think most people would rather be in California than Moscow.
Yeah. And it's really ultimately all about perspective, to your point. But on that, and maybe just this will be the final bit. And again, everybody here, please make sure you follow Marin and check out his research as well. How do you stay optimistic? You've traveled the globe, so you know this, you see this, but there are a lot of people that don't travel, that only see what's being fed to them from the TV. It seems to me that it takes conscious effort nowadays to be optimistic.
Yeah, but the easiest thing in the world to do is to bitch and whine. Get up early, wash your face, brush your teeth, put on some clothes, go to work and learn and try to add value. I don't know, about 4 or 5 months ago, I was down at Stanford, and most people are like, "Oh, San Francisco is awful." I went to the worst parts of San Francisco with an actual multi-billionaire, one of the richest people in the world. And it's kind of like Vancouver, okay? And we went for a walk, and then we had a meeting with Jennifer Doudon, who, is basically the brains behind CRISPR. You look at the technologies that are happening in real time in these American university and the brilliant minds and what's going on. She won a Nobel Prize for that. So there's incredible things going on. Incredible things. You look at the technologies, and look what Elon Musk is doing. Whether you like the guy or not, it's incredible. The guy took a rocket and put it back down. That's how you say optimistic. Like, man, there's so many things to be optimistic about. And yes, I get it. We're in a generation where, the millennials and I worry about it for my own kids, where everyone's, one click away from depression and one click away from being euphorically happy. There's all these issues moving around, and, I look at the school systems. I remember I started out as a teacher, and it was, in my opinion, going a little weak. Now you win a prize for being in last place, and then these kids get to life and they think that you still win a prize for being in last place. No, you get fired when you're in last place. That's how the real world works. And there's this culture shock, but you know what? You'll get through it. This too shall pass. And there's incredible technologies. I don't know. I think, how you stay optimistic about it? Get on a plane and travel around the world and see how messed up the rest of the world is. And maybe everyone thinks it's sunnier on the other side of the grass. It's not. It's pretty good here.
Well, and do that, especially if the dollar does have another super spike.
There you go.
Exactly. So everybody here again, thank you for joining. Appreciate everybody's time here. Marin, always a pleasure speaking with you. Really, I enjoy listening to you, and really do appreciate your knowledge, and everybody enjoy the rest of your day. Thank you, Marin. Appreciate it.
Take care. Bye-bye.